Hey traders, welcome back to another lesson. So earlier, one of our members asked me, hey Nick, how do you identify the market structure and the direction on dollar CAD? And I'll just use this as such a good example to tell all of you how do I normally filter out the direction of the market and whether if I should go long, if I should go short on a high time frame or the lower time frame. So let's go on to the daily. So normally what I'll do first thing first is I like to identify the higher time frame direction. So in this case, again, I'd like to emphasize this, whether if the higher time frame, let's say on a daily, if it's bullish or if it's bearish, it doesn't really affect much of my short-term trading direction. So if let's say I'm an intraday trader, I'm looking to trade the 15-minute, whether if the daily time frame is bullish or bearish, it doesn't affect me. But if I have the high time frame leaning alongside my lower time frame trade analysis, that just gives me more confluence, more confirmation, right? Let's say if I were to go long, high time frame bullish, then the probability of success is a little bit higher. So I'll give you one example. So in this case, if you all can see, dollar CAD obviously on a daily time frame is bullish. So some of you may also wonder, hey, so the direction is bullish, okay? But why have you been looking to sell this since a long time ago? I believe since mid-April or early May, we have already started talking about bearish on dollar CAD. Why? It's because although the daily is bullish, but there were multiple failure on the high time frame that tells me we are not going to push higher anytime soon. First confirmation was high time frame, we got price rejection or price failure at 138.26. So that's our first confirmation on late April, mid or late April. So if you look at the date here, so it should be 17th of April, so mid-April. So when price failed multiple times, that it was roughly around early May where I start talking about possible short on dollar CAD. Why? Because price, after the rejection at 138.26, it followed by failure at 137.72. And guess what? We had one failure here. If you drop down to the 8 hour, you can actually see first price rejection or first failure at 137.72. Second failure on 1st of May at 137.72. Then we got what? Multiple failure to go back to high. It seems like a bull flag here, push through. Guess what? Still failed at 137.72. One time, another time. So when price forms so many rejection on a high time frame, although it's bullish, but I will conclude that short term wise, we are going to see a deep retracement into following major support. So in this case, where were the major support? Here. Very obvious. We got one major support at 136.43. If you put on a replay, it was very noticeable as well. See that? Very obvious. So this is one of the main reasons why I keep saying that I believe short term we're going to see dollar CAD retrace. So first confirmation is high time frame structure. Second confirmation is, were there any recent failure at obvious level? So in this case, where were the failure? Here and here, 138.20 and 137.70. So two failure to the upside. Some of you may also question another thing, but price also rejected the low at 136.43. So in this case, are you bullish or bearish? The answer is market is on a ranging condition. You don't have to predict if it's going to bullish, if it is bullish or bearish, but just know that price failed to push higher, failed to break 137.72. This is where you can capitalize on a short-term sell. So if you identify that market has been defending this 136.47, what you have to do is you short at 137.70 and you just cover your position at 136.48. It's that simple. You don't have to short this and you anticipate this to sell. What if this thing range for another 2 months? It's possible. It is one of the possibility as well. So let's say you shorted here 137.70 and price come back to 136.45 and still reject this level. Market is just on a consolidation. So what you have to do next is you either wait for price to go back to your area of value or point of interest at 137.72 to go short, or you don't take any position. That's it. So until you see a major break under the low, so it's one of the easiest way to get hooked into a false break is you start shorting here. So what happened is a lot of times I see traders do this. They see a major sell and they short it at 136.75. That's what we call what a poor price position. You short it there, and guess what? Your position gets stuck. This is what we call you're shorting in a mid-range. You're not shorting at a good price position. You're shorting in a mid-range, which means your position has no positive risk-reward ratio, because why? Your stop loss has to be above this high, and your TP has to be here. Realistically, from a logical standpoint, your TP is at an obvious level of support if it's on a downtrend. So let's say if you try to short it here, chasing a sell, and guess what? You have a negative risk-reward ratio. And that's why a lot of traders, a lot of new traders, they get stuck onto, hey, why am I always wrong? I go short, price stop me out, and it come back down. That's because you're shorting on a mid-range. Shorting on a mid-range means price has no reason, and there has no logic, and you just try to bounce back and forth, back and forth. So this is one of the obvious mistakes that a lot of you do, and a lot of new traders does as well. So easy way is you don't go short, you only short when price goes back to 137.70. If you want to go long here, it's fine. But if you look onto the left, there were a lot of times price falls break the level. So if you try to go long, there is a little bit dangerous. Alright, I much prefer to say, let's say price dropped, it seems like it dropped under 136.40, and let's say here, we use this as an example. You saw price dropped, but it has no follow through, and it popped back above the level, and that's what a TPF formation. Alright, so you can go long there based on TPF. TP wise, you just have to be flexible. When market is in a consolidation or in a range, it is very difficult to frame your TP, because sometimes you get caught being too aggressive on your TP, as in you're way too greedy. In a sense, you just want to target a 138.26 high, but guess what? It is not on a clear range. A clear range is something like this. See that? It's a lot clearer. Short it at the resistance, cover the position at the support, long at the support, cover your position at the resistance. These are clear range, but look at this. It's a little bit slanted. It has no clear equal high shown as well, so it's not a good range to trade. That's why you should only be shorting around the 137.70, and also shouldn't be doing anything. So right now, what should you do? So just now we talked about 2 points. First point is high time frame structure, direction. Second point is, were there any recent failure? So let me just write them down. What's the current recent high time frame structure? That's the first thing. And second thing is, were there any recent failure at key levels? So after I identify a key, is there any failure at the key level, the third thing I'll ask myself is, were there any failure at minor levels? So minor level is important as well, because we are short-term trader. So minor level basically means what? Who's in control? So just ask yourself, hey, who's in control in the short term? This is more of a short term. By asking yourself this question right now, you know that high time frame we failed at first level 138.30, we failed at 137.75, and on the lower time frame, what's the structure? This is when you can start dropping down onto the 1 hour or the 30-minute time frame. Let me just minimize this. All right. So where were the failure? I've already marked out the level here, which is 137.08. See that? Price started to print a low high at 137.08, and guess what? 1 time, 2 times, 3 times fail. False break above that 137.08 and come all the way back. Guess what? Failure, another fake out. This candle was the ultimate confirmation that tells me that sellers are in control, whether if it's on the high time frame, whether if it's on lower time frame. Right now, we got a failure, we get an obvious rejection at 137.08. So this is the final piece of confirmation that tells me I should be going short. Alright, so the fourth point is price pattern, or you can use anything like EMAs, flag, TPF, etc. Right? So this is when I'll start looking for possible entry. So if I were to go short, as I said, it's not good to short it here. You can either short it again at 137.07, or you wait for a break under 136.35. All right. So again, you can either short it there on a retracement, or you can wait for a major. Alright, so, or you can also wait for a major structural shift, as in we have a deep break of structure. Then you go short, anticipating a larger or longer term sell. This is the only two way you can trade the current dollar cap. Alright, I hope it makes sense to a lot of you. And yeah, this is something that I normally do. It's all my thought process on how do I filter out what's the direction, who's in control, what's the exact price pattern I should be utilizing to trade the current condition. Because we have patterns like flag, the TPF, lots of patterns that we trade inside the community, but do you know how to use them in the right context? That's the question, right? So by being able to go through this thought process, what's the higher time frame structure? Is it bullish or bearish? Were there any recent failure at key levels? In this case, where were the key level? 138.35, then 137.72. So multiple failure. Were there any recent failure on a lower time frame? This is when you start dropping down to the 1 hour to 30 minute, and you say, hey, we got multiple failure, multiple rejection, 137.08. And that's when you drop down to the last one, which is price pattern, which is price behavior, price response, and the exact pattern that you want to trade on the on the pair, on dollar cap. All right. So I hope it helps a lot of you. And yeah, talk to you in the next video. Bye bye.